Thank you for the opportunity. Welcome to the presentation of Group 7 of Intermediate Accounting Subject 1 STIE PERBANAS Surabaya. Before continuing with the presentation material, I would like to introduce my fellow group members 7. Today, Group 7 will discuss Chapter 2 and the title Comprehensive Income Statement from Intermediate Accounting 1. Before you watch this explanation video, you are advised to listen to the explanation theory video from Group 2 because that will explain the theory in full, namely from Group 2. Because here we Group 7 only provides example of the implementation of the exercise about the comprehensive income statement. So, as an introduction, what is a comprehensive income statement? A comprehensive income statement is a report that measures the success of the company performance over a certain period. Information about the company performance is used to assess and predict the amount and timing of uncertain future cash flow. Now, for clearer material, we will continue to enter the exercise example so that you can understand more about these comprehensive income statements. My friends and I will give an example. Keep on watching, guys!
Well, here I will discuss about the brief exercise. You can see an example of this problem in this matter. We are instructed to prepare an income statement for STAR year 2015, and STAR has 100,000 series. Here I will answer the question above, namely the first we are looking for income before income tax. Income from operation of 430,000 rupiah, less interest expense of 20,000 rupiah, namely 410 rupiah, and after that we find the net income, which is $410,000 minus $410,000, time the tax rate of 30%, and the result is $287,000.
So here I am going to discuss the brief exercise. You can see the problem beside me. Now, on this question, they ask how much Compute Holdings earnings per share in 2015. So, a simple way we know that earnings per share of Compute Holdings in 2015 is by way of net income subtracted by dividends, then the result is divided by the weighted average share. $1 million minus $250,000 and then divide by $190,000, and the result is $3.95 per share.
Well, I'm trying to the brief exercise for point 6. The question is indicate in what section gross profit, income from operation or income before income tax, and the following items are reported: A. Interest revenue, B. Interest expense, C. Loss on impairment of goodwill, D. Sales revenue, and A. Administrative expense. And my opinion, the answer is A. Income from operation, and B. Income from income tax, and C. Income from operation, and D. Gross profit, and I. Income from operation.
Thanks for the opportunity. In here, I will explain brief exercise 4.9. So the description for the question is vendor's company has recorded bad expense in the past at a rate of 1/2 of net sales. In 2015, vendors decided to increase its estimate to 2%. If the new rate had been used in prior years, cumulative bad debt expense would have been €3,800 instead of €2,085. In 2015, bad debt expense will be €1,020 instead of €90,000 if vendor's tax rate is 30%. What amount should it report as the cumulative effect of changing the estimated bad debt rates? And the answer is vendors would not report any cumulative effect because a change in estimate is not handled retrospectively. Vendors would report bad debt expense of $1,020 in 2014.
Hello, Assalamualaikum warahmatullahi wabarakatuh. Good morning, and how was your day? I have a great day. Okay, let me introduce myself. My name is Inka Amina Susmita Dewi. My study number is 20193101116. And here I want to explain about brief exercise 402 and exercise 403. Firstly, I want to present brief exercise 402. Brisky Corporation had net sales of $2,400,000 and interest revenue of $31,000 during 2015. Expense for 2015 were cost of goods sold $1,450,000, administrative expense $212,000, selling expense $280,000, and interest expense $45,000. Brisky tax rate is 30%. The corporation had 100,000 shares authorized and 7,000 shares issued and outstanding during 2015. Prepare an income statement for the year ended December 31, 2015. Okay, now let's make an income statement. Brisky Corporation income statement for the year ended December 31, 2015. Revenues, net sales of $2,400,000. Interest revenue, $31,000. And total revenues is $2,431,000. For expense, cost of goods sold, $1,450,000. Selling expense, $280,000. Administrative expense is $212,000. Interest expense, $45,000. Income tax expense, $133,002. And total expense of $2,120,200. So for net income is total revenue reduced with total expense, and the last is 100. So the net income is $310,800. For half income tax expense, we have to reduce total revenue with expense and then multiply by tax. Then for earning per shares is net income divided by shares, and then the result is 4044 shares. Thank you.
For then, let me try the exercise for point 15. The question is comprehensive income. Gartner Corporation reported the following for 20 and 15. Net sales 1,200,000. Cost of goods sold 720. Selling and administrative expense 320. And unrealized holding gain on non-trading equity securities 15,000. Instruction: prepare a statement of comprehensive income using the two-statement format. Ignore income tax and earning per share. This is the explanation and the answer. The first, sales 1,200,000 minus cost of goods sold 720, and the result is gross profit 480. And then gross profit 480 minus selling and administrative expense 320, and then the result is net income 160. And the last, net income 160 plus unrealized holding gain on non-trading equity securities 15,000, and the final result is comprehensive income 175,000.
So then we move on to the exercise. In this measure, we are told to find the net income. The way to find the calculation of net income is that we first classify which ones include asset and liability. Here, the assets are cash, account receivable, inventory, and investment. Now, you can see the total asset like this beside me. Now, we find the result of the asset value, which is $194,000. Then, we further classify which ones are included as liability. It is clear that liability, namely there are bond payable and account payable. We can know from the reduction that the liability value is $31,000. So after we know the value of the asset and liability, we can find out the equity value of the shareholders of $163,000. Assets less liability $194,000 means $163,000. Now we have the shareholders' equity, then we can see that there is an additional paid in capital increase of $138,000. We can read again in the problem that there is a decrease in retained earnings by $24,000. You can see here the sum, so we already know how much net income is $49,000.
Now I will explain and present about exercise 403. Present below are current account balance of wheat products. Rent revenue of $6,500. Interest expense $12,700. $700, and so on, as we see on the screen. So the instruction is, from the foregoing, compute the following: A. Total net revenue, B. Net income, and C. Dividends declared during the current year. To find net income, we must reduce the sales discount and sales return and allowance with sales revenue. Then the net sales is $379,800. Then the net sales plus dividend revenue $71,000 and plus rent revenue is $6,500. Then the total net revenue is $457,300. Now, number B, net income. Net income is total net revenue reduced with expense. Then the total expense is $379,000. Then plus income before income tax and income tax expense. Then the result is $104,900. So the result of net income is $104,900. For number C is dividends declared during the current year. Put ending retained earning and beginning retained earning in credit, then the net increase in debit. And don't forget net income in credit, and then dividend declared is $85,300. So the result is loss of $85,300.
Then we move on to the exercise question. In this case, it is recommended that we calculate A. Revenue from operation, B. Net income, C. Net income attributable to the controlling shareholder of the company, D. Comprehensive income, and E. Retained earnings. December 31, 2015. First, we look for income from operation, that is, we calculate selling and administrative costs 120,000 plus other income and expense, namely the profit from the sale of brand asset 30,000. The result is 150,000, namely income from operation. Next, we look for net income. Income from continued operation 144,000 minus loss in continued operation 12,000 rupiah, and net profit it is 132,000. Next, we look for net income. Net income attributable to Phil, the controlling shareholder of the company. Net profit of 132,000 minus allocation to non-control split with 40,000, namely the result of 92,000 net profit attributable to controlling shareholder. Then we say comprehensive income, net income 142,000 plus unrealized gain non-trading equity security 10,000, namely 142 comprehensive income. Then we look for the retained earning balance on December 31, 2005. Thus, income net income 130,000 minus dividend report and by 5,000, namely 127,000.
Thanks for the opportunity. In here, I will explain exercise 4.5. So, in this description from question, several accounts are included in the income statement, which are grouped directly into revenue, which are included in expense. So, the answer the include revenue is sales revenue and rent revenue. Sales revenue 96,500 and rent revenue 17,230. Sales revenue plus rent revenue is net sale. So the net sale is 130,730. And then cost of goods sold. Cost of goods sold from the question is 63,750. Net sales minus cost of goods sold is gross profit. So the gross profit is 50,160. And then operating expense. Operating expense is office salaries, depreciation of office and equipment, delivery expense, sales commission, and interest expense. So, operating expense is 21,390. And then income before income tax. Income before income tax from gross profit minus operating expense. So income before income tax is 28,330. And the last is income tax. Income tax from the question is 7,580. So income before income tax minus income tax is net income, and the net income is 21,190 year.
Okay guys, that's a presentation from group 7. Thank you for watching. Sorry if there are any wrong words or flaws in this video. Wassalamualaikum warahmatullahi wabarakatuh.